Hello and welcome to the Friday market update. Well, let's talk about what happened this week and why it actually matters for anyone thinking about buying or selling a home. So this week started off a little rocky. The market got shaken by headlines about a possible Trump administration move involving Greenland. There was a lot of talk about that. Whether that idea was serious or not, markets don't like surprises. So when investors get nervous, they pull money out of long-term investments and then can cause interest rates to jump quickly. That's exactly what we saw early in the week. Now, mortgage rates moved higher as investors reacted to uncertainty. And then something important happened. The tone completely changed. It completely flipped around. The idea was walked back, things cooled off, and the market settled back down. So when investors feel more comfortable again, interest rates generally follow. This is a good reminder that mortgage rates are not just about housing. They are influenced by confidence, headlines, and how steady the world feels. Now, here's the good news. We also got new inflation data this week from the PCE, Personal Consumption Expenditure, and it came in calm, not hot, not scary, just steady. So inflation continues to move in the right direction. If you look at the last 3 months run rate, it's at 2.2%. The Fed's target is 2%. So we're definitely headed in the right direction, slowly but consistently. And that is exactly what the market wants to see. Consistency. It's boring, but that's okay. I'll take boring. So when inflation behaves, mortgage rates and interest rates tend to calm down too. So another encouraging sign is that housing is finally being talked about as a real issue at a national level. No matter where you fall politically, it's clear that affordability has become impossible to ignore. The current administration, they're starting to look at ideas that can actually help buyers instead of making homes more expensive. They've thrown out there the 50-year mortgages, portable mortgages, where you take your mortgage from here at 3% and move it to the new house. They've talked about that. They're talking about eliminating the capital gains exemption from the sale of a home. And that could lead to millions of dollars that could potentially flow back into the economy. Now, one idea getting a lot of attention, and I've been really harping on it because I believe in it full-heartedly, is a possible change to the rules around using money from a 401k as a down payment to buy a home. The proposal being discussed would remove the 10% penalty and possibly even the income tax on up to $50,000 from a 401k if that money is used to buy a primary home. That could be huge for people. So for many buyers, especially first-time buyers, the hardest part of buying a home is not necessarily the monthly payment. It's coming up with the cash needed up front for the down payment, closing costs, moving expenses, and the like. This type of change could help buyers get over that hurdle without taking on risky loans. I'm a big proponent of home buyers considering using their 401k for home purchase. I've had many buyers do it. They've taken loans, they've liquidated. It's really about education and letting them understand what they're doing and how it can benefit them long term. And remember, for most families, owning a home has been one of the best ways to build long-term wealth. Homeowners have 44 times the net worth of a renter. So I truly believe in home ownership, and I truly believe if you can do it responsibly and know what you're getting into, using your 401k could be a great idea. So this could be a great tool for the right situation. Now, another big thing we are watching is the Federal Reserve. Yes, the Federal Reserve. There is a lot of talk that a new Fed chair who will replace Jerome Powell could be announced within the next couple of weeks. The expectation is the market is that the new Fed chair would be much more focused on helping the economy grow and more open to lowering interest rates when the inflation allows. Now that's important because while the Fed does not set mortgage rates directly, their decisions do influence the overall direction of interest rates, including mortgage rates. Now, when the Fed signals confidence and flexibility, mortgage rates usually benefit. When you put all of this together, the picture starts to look better. Inflation is calming down. Housing is finally being taken seriously. New ideas are being explored to help homebuyers. A new Fed chair may shift in a more helpful direction for the housing market. Will there be ups and downs? 100%. Absolutely. That's normal. But the bigger trend is starting to improve. It's coming down. Mortgage rates are coming down and affordability is improving. Now, that's why I genuinely feel optimistic about what's ahead. If things continue moving this way, 2026 is shaping up to be a very strong year for real estate. Not because of hype, not because the pieces are slowly lining up. It's because everything is lining up and moving into place. Lower mortgage rates, more realistic solutions, and more opportunity for people who are paying attention. The goal is not to guess the perfect moment to get into the market. The goal is to understand what's happening so you can make smart decisions with confidence. We want your buyers to have that confidence to go out, be a homeowner, and have fun living in their new home. So I hope you have a great weekend. We'll see you next week. And take care. Gaylord out. Go Broncos. Root for my team. Bye.